Congratulations on putting together this essay. How did you piece it together? Carmen, did you say, Vincent, we got to write this, the world's coming down to an end? Or Vincent, did you tell Carmen, we got to do this? Carmen, you start. How did you generate this important essay?
Well, Tom, you know, Vincent and I have been writing together for a long time. So, you know, back in 2010, we wrote for the Kansas City Fed for the Jackson Hole Conference, what the next 10 years after the global financial crisis looked like. And it was taking stock of the aftermath of major shocks, you know. So this certainly classifies as a major shock. And these kinds of events leave lasting consequences. And so right. That's basically the theme where we came together.
Let us drive this story forward. And folks, again, I can't say enough about a full read of this article in Foreign Affairs. Vincent Reinhart, how do we escape this depression? And if we have a global or a United States depression, is stimulus and large stimulus the only answer?
So the sad thing is this really is the third time we wrote this article, for 2008 for the European crisis and one more time for this pandemic depression. What do you need? You have to follow Larry Summers' advice: targeted, temporary, and timely fiscal stimulus. They did it back in March with the CARES Act. They can do it again.
Carmen, can you build on something for us? Confusing a mechanical bounce with the recovery. Is that what we've been doing over the last few months?
Yes. Look, a very simple, basic definition of recovery, a minimum minimorum, is you at least have the same level of income, same level of GDP that you had before the crisis started. That took quite a number of years, 5 years in the U.S. from the last, the global financial crisis, and even longer for Europe. So yeah, before that, we see a snapback. We see growth rates come back simply because the declines were so sharp in the earlier in the year. But that is rebound. Recovery is when you're at least as well off as you were before, and that will take some years.
So in your mind, Carmen, do you think this is a political bias, a political decision to make the call to say, look at the recovery, confuse it with a mechanical bounce, and say we don't need more fiscal stimulus? Or do you just think it's a failure of the understanding of economics that we continue to make, as Vincent points out?
You know, there is no simple answer. It has elements of both, but we've seen it in history, you know, often enough. The premature declaration of victory is always been a recurring theme, that you know, the first signs of recovery, the green shoots, means that's it. And you know, I think that this time we really didn't learn much from the over-optimism of 2008, 2009, where growth forecasts had to be marked down repeatedly.
So, Vincent, can you build on that with the idea that we're heading into a winter where we have a virus that is actually expanding, worsening, spreading, even though people are getting more concerned about the debt, about adding to it with more fiscal support? Do you think, Vincent, we are headed toward a double-dip recession that will hamper growth in a longer-term way with scarring economically that currently is not being modeled for?
So the rebound has enough strength right now. There is waning fiscal impetus, but most importantly, there's considerable monetary accommodation. Households have a lot of savings, so they have the wherewithal to spend. It isn't as much a risk of a double dip. It's a risk that we extend the rebound, that it takes even longer to get to recovery. And the longer it takes to recover the level of activity, the more likely unfortunate things happen. Balance sheets get strained. There are even more business failures. People lose more and more skills and exit the labor market. So I'm more worried about the permanent scarring associated with taking too long to get to recovery, because usually you can bet on market economies.
So what does that mean, Carmen, in terms of emerging markets insolvencies, the idea of this emerging markets crisis that a lot of people have been talking about, including yourself? Do you think that if we do get this period of scarring, as Vincent is talking about, that you do get that wave of insolvencies in the developing world that so far we haven't seen?
Well, before we say we haven't seen, the pickup in activity, even before the pandemic, we had a lot of frailties in the low-income economies and in several emerging markets. Witness Argentina, Lebanon, Venezuela, Ecuador, now Zambia. This is a longer list than what we had in years. And of course, not everything happens simultaneously, but I think the stage is set for, a number, as I said, especially vulnerable are some of the lower income countries, but not limited to, a very protracted period of financial fragility, both in the banking side, and the possibility of, in the worst cases, outright sovereign debt crises.
Right.
And they don't need to be with the drama of a default, but they would be still requiring restructuring, still requiring coming to the IMF for programs and so on.
Carmen Reinhart, Vincent Reinhart with us here this morning on their important article, The Pandemic, Depression, and Foreign Affairs this summer. It was without question my essay of the summer. Carmen Reinhart, a question for you, and it's delicate as World Bank chief economist. Do we completely misjudge the percent of GDP of stimulus aid income replacement that will be required? Are we, as sort of institutions and elites, completely misjudging the 2 to 3% of GDP is not going to get it done, and the statistic is much more towards 5 to 6% of GDP?
It's not entirely a misjudgment. It's also a reality of capacity. I mean, if you're speaking about the emerging world, the private capital flows have significantly retrenched. I wouldn't say dried up, and so it's really the multilaterals. It's the IMF. It's the World Bank. It's the development banks. The firepower there is very limited. It's not the Federal Reserve. It's not the, BOJ or the ECB. These institutions have constraints in how much they can deliver. So it's not entirely about misjudging the seriousness of what is needed, but also, having the capacity for well over 100 countries to deliver that kind of shot in the arm.
Carmen, just quickly, we caught up with David Rosenberg around about 40 minutes ago, and he wanted your view on how higher debt loads can constrain demand, constrain potential GDP. Carmen, can you speak to that for us, given how much debt we've just added to the global economy in the last 9 months? Have you started doing work on that?
Well, look, I've been doing a lot of work also on the issue, what I think is, for the advanced economies, the more immediate issues, which I think have to do with private debt and financial fragility. This is what I alluded to. A big shot in the arm, a big source of stimulus. This time has also been forbearance, delaying payments for households and firms. When those programs expire, do those debts continue to be repaid? Mm-hmm. So the more, for the advanced economies, as opposed to some of the lower income countries and some of the emerging markets, the more immediate issue is the private debt. And that is already, I think, especially for the corporate sector, the small and medium businesses, already a source of concern.